The scariest thing about today is the fact that a lot of traders made a lot of money. Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradeEmpowered.com, and welcome to another episode of the Trading Blog. It's a beautiful day out here on the eastern coast of the United States, so decided not to be cooped up in the office today and record today's blog episode from the outside. Now, the statement I let you guys hear earlier may be a little bit confusing, right? How can it be a bad day? How can it be scary if a lot of traders made money? And let me explain why. Today was a very big day of fundamental news announcements. We had the ECB press conference from Mario Draghi, and that's a news event that essentially the market was waiting to hear so that it can start moving again. And we saw some pretty erratic movement in the markets this morning, as we would expect from such news events. Now, the problem is that these type of movements, they do one of two things to a trader. I'm burning up out here if you can't tell. They do one of two things to a trader. They will either cause a trader to lose a lot of money, taking a loss by being on the wrong part of the move, or if a trader is on the right part of the move, they will earn some money. And, you know, it would seem like a good thing to be on the right side of the move and make some money in the markets today, but it can actually be pretty devastating, and here's why. Something like that gives you a false sense of confidence. So a trader that was, you know, a trader, and I'm not talking about traders that actually had a plan and a way to trade it that is testable, verifiable, and repeatable. I'm talking about traders that just got lucky, traders that happen to guess the reaction or just be in a trade and, you know, maybe forget to take it off and they made some money today. For those traders, it's going to give them a false sense of confidence. It's going to give them a confidence to think that they can actually consistently trade these markets when they really got lucky. And that could be very dangerous. This used to happen to me a lot when I would get on a few hot streaks. I'd win a few trades. I'd catch some big moves. And then I'd start thinking, yeah, Akil, you're the man. Let's start upping that position size. Let's start putting more money at stake, more money at risk, right? And then eventually the market always, right? The market always takes what it wants, and it will punish those who are inconsistent. It will punish those who are novices. And when you get punished with taking a bigger position size, it hurts a little bit more. So I'm sure there are a lot of traders out there today that are feeling themselves, they're feeling great, they're feeling confident because they got lucky. And unfortunately, as they take that overconfidence into the market tomorrow, into the next week, into the next month, throughout the rest of the year, eventually the market's going to even things out and it's going to take its revenge, and that could be very dangerous. It's important to understand that there are four types of trades, guys, right? There are good trades, there are bad trades, there are profitable trades, and there are non-profitable trades. So good, bad, winners, losers. Let's put it like that. And too often we associate a good trade with being a winning trade, or a good trade with being a profitable trade. We associate a bad trade with being a losing trade or a non-profitable trade. And that's just not the case, right? There's no system out there that wins 100% of the time. And you're going to have plenty of good trades that lose. And on the other side, there will be plenty of bad trades that win. But if you're trading a system, again, that is testable, verifiable, and repeatable, if you consistently execute good trades, that means you're consistently executing your edge in the market. And that should bring you consistent profitability in the long run. So the goal shouldn't be to find winners or to find profitable trades, right? Because, you know, if your winners or profitable trades are all bad trades, eventually it's going to catch up to you. The goal should be to consistently execute good trades and just let the profit be a result of that, right? Let the profit be a result of doing what you were supposed to do in the market. So quick blog out there. If anyone caught the move today by accident, this is for you. Don't get overconfident. I've told you guys a story of a trader before where he got lucky in a trade, made a boatload of money, but instead of getting overconfident, he admitted that, man, I got lucky and I'm not going to blow this money. I'm going to spend it with education instead. And that changed this trader's career. That's the approach you want to take. I'm not saying to spend it on education, although you can. We do have those 25% off deals going throughout the weekend, but don't be in a rush to waste that money. Put it aside, put it into your account, let it grow for later, and start thinking about that feeling, how good it felt to win, and put yourself in a position to win more often. That means start educating yourself on the market, start learning how to trade so you can consistently get that feeling from good trades and not have the market take it back from you. Because I'm telling you, it's going to happen. I've been there. A lot of you you're saying that would never happen to me, Akil. Trust me, I've been there, and I've worked with plenty of traders that have done that. So I'm burning out up here, guys. It's it's like 90 degrees, but it's a northeast 90, so it's thick like cake batter. But until next time, plan your trade your plan. Good luck in the markets tomorrow. All right, traders. So I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our TradingPower.com website, or also take a look and you'll see more videos available for you. Have a good one.